Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 20th of August. All right, now after the weekend, especially in this day and age, it's always good to sort of just slow down, relax, and just use Monday, especially at least for the first half of Monday, to let the markets open up and reanalyze what's going on and what the potential is for the week. Now, if you just look at the major currency pairs, and I've just been sort of having a bit of a fiddle, don't overcomplicate your technical analysis. Now, if you look at the majors here, the Aussie, Kiwi, Euro and Sterling, in particular, they look like they've formed a little bit of a base. I mean, they've managed to hold up when it looked like they were all going to collapse. The US dollar has just faded somewhat, and that's sort of as expected. I mean, the currencies just don't go down in a straight line, or they don't go up in a straight line. It's down, pause, a little bit of a relief rally, and they continue on. So for me, at the moment, these little moves here on Aussie, Kiwi, Euro and Sterling look a bit more like a structural shift. Okay, like if you look at the trading previously, it had rallied and it just come straight back off. But these are a little bit more sustained, and to me, it looks like we may see a little bit of a drift off in the dollar. And with that, you can actually sort of see there's without actually the trend changing, as in the US dollar strength, these currencies could move a decent way and squeeze the market out, squeeze the shorts out before they actually start moving lower. So they can all move up to these levels and come back down, and they're still in that downtrend. But so at the moment, it's a bit of that, they don't look like they've got much momentum, I've got to say that. But at the same time, there is room for a squeeze here to the top side as we come through Monday into Tuesday's trading. Now, there's not a huge amount of data. There's nothing out there. The geopolitical situation has receded somewhat. Now, this is one of the things about geopolitical events, and you can see what's happening in dollar yen. It's just back to trading sideways. You wouldn't even think anything was going on. Now, initially, when geopolitical events really kick into gear, you get that huge hype in the media. But the media also know there's only a certain amount of time before people switch off, will turn the channel off if they keep talking about the same crap. So what you're seeing in Turkey is, yeah, there's still a little bit of banter, but the whole impact, the massive high impact of that event and the lira depreciating is over, right? So from here on, it may drift in, but the impact on euro and the other currency pairs is going to fade from here. Now, there's only one real major situation or event on Friday, and we covered this in the FX Market Insight on Friday. We had the next best trade. We geared up a couple of opportunities here on the CAD CPI, and it really didn't disappoint. The CPI numbers were through the roof. They're expecting 2.5% year on year, came out at 3%. I think the month-on-month data was also hugely strong. So to me, and the market has already factored in an interest rate hike in Canada as early as September, like next month, right? And that's where the real clear currency pair for me at the moment is definitely dollar CAD. This thing here has a pulse. It has direction. That's worth focusing on very closely. All right. Now, so that's where the majors are. So we can see exactly what's going on. Okay. As I said, like you've got these nicely correlating four pairs. Dollar CAD's doing its own thing on the CPI, and with all the stress out of the geopolitical issues, dollar yen's is trading sideways. So that's what we've got. So you come back and have a look and just see where, if anything else was contributing to this. And first and foremost, you go back to the economic numbers, right? So you look at the economic numbers from Friday, okay, and you can see very clearly, here's the CPI numbers. I mean, they are just out of control. And as much as a lot of these economies are saying, well, things aren't going so great, we are now seeing inflation going through the roof in the UK, in Canada. It's already on the rise in the US. So all these other little countries like Australia and New Zealand probably never really had the full impact of the GFC. They are struggling at the moment, and that's more to do with this situation with China. Now, there's some sort of mediation between the US and China coming up. If they come out with some sort of deal, then inflation could potentially go through the roof in Australia and New Zealand as well. And then so basically all the developed countries are raising interest rates. Now, this is what the central banks didn't want to have to do, especially, say, Australia in particular, where household debt is at massive maximum levels never seen before. So there's some real situations they're going to have to deal with regards debt that has just been lingering in the market. The US has already dealt with that. They've come out the other side. Looks like Canada has as well. and the UK also. Now you've got Europe or the Eurozone, and then you've got also the Antipodeans, Australia, New Zealand, and their connection to China. So it's going to be interesting from here to see what happens. Now you had that really strong Canadian numbers. Now the University of Michigan consumer sentiment numbers, this is a really important sentiment number. Historically, it's well respected. And this number was also a little bit weaker. And I think that was one of the main culprits for where the US dollar drifted off at the very end of the North American trading session. So weakness there. You've also had strength in dollar CAD, and that made that move so particularly gorgeous. All right. Now, just to come back to that, and this is where you can start to piece your whole week together. If I just get up the MyFX Trading Hub. Now, next major event. Now, this is one of the key things. You just got to get yourself into the groove with the pace of the market. Now, the next major event on Tuesday is basically the RBA monetary policy meeting minutes. We've got a very slow start to the week, pretty much like most weeks, where you get into Wednesday, the currencies are a lot clearer and the data is a little bit more consistent and potentially higher impact. At the moment, the geopolitical impact is fading, which is back to almost normal, good trading conditions. What we are lacking at the moment is a little bit of direction. If anything, those US numbers were a little bit, as I said, weaker, and gives the US dollar a bit of weakness going into trading to start the week. You come back down. This is a good time to start planning out your potential opportunities. Now, when we look at the upcoming events, we're not looking at, oh yeah, let's trade every one of these. Okay, that's not what it's about. We're looking at the technical side, and we're looking at these economic numbers to see if they actually fit in with what's going on technically, and they are potentially momentum changes. They give us momentum. They give us short-term direction. The bigger events, like CPI numbers or the central banks, they don't actually just give us short-term direction. They can give us long-term direction. So that's what we're looking for, and you're looking for opportunities. So when I see the US FOMC minutes, I'm already considering, okay, all the majors are going to be active at this point. Okay, when you come back down to looking at individual country events, yeah, well, the ECB and the German flash manufacturing, it's going to be important for the euro and the euro crosses. And then you come back down, we've got US durable goods on Friday. So all up, there's not a huge amount going on. The FOMC minutes, because the Fed is the biggest event thing in the market, that will be a prime release. So if you start reading a lot of media releases and these sorts of things, it'll be all around the FOMC minutes. Now, we know Jerome Powell has been extremely consistent. He's very smart. I see no change in the FOMC, so that's probably business as usual, but it doesn't stop everyone putting a lot of effort into it. So that's where we are with the this week's trading. It's trying to work out, what's going to happen across the board. Now, our daily analysis snapshot is still being repaired. It's been a real nuisance, but so we've got this temporary analysis there. You can see sort of what's going on. This is where a lot of these currencies, this is what you see. So the US dollar, right, was a little bit weaker on Friday. Now, the general analysis on a daily perspective for these currencies, yeah, overall, they're still going down. That's what I'm saying. Like, the market's probably caught short here in a lot of these, and we have a chance for a squeeze higher. So just be aware of that. Now, coming back down, for those that aren't aware of the next best trades, now what we're looking for is connecting the fundamentals with the technicals. Now, on Friday, if you were in the trade zone, you would have seen with dollar CAD and those CPI numbers, there was two opportunities. One is a strong CPI number. The other is a weak. Now, the weak number was the best opportunity was in dollar CAD. The strong inflation numbers were on sterling CAD. I thought was the best. It was pretty much not necessarily just a quick trade. It's actually stayed where it is, but it's put an upward bias on the CAD. Sterling already has a bit of a downward bias, so it was a pretty natural, clean trade to be looking at. A number of our traders hit that one. That was a good result, and just goes to show a little bit of patience in the market goes a long way. All right, so you're looking at the numbers. There's nothing out today, nothing out on Monday. There's nothing to get excited about, okay? If you come back over to the economic numbers themselves, you can really sort of focus in on every potential release. But as I said, there's not a hell of a lot to go by. If you're sort of gagging and looking at a currency pair, well, we have got some producer prices out of Germany. Yeah, have a look at those. I mean, they can come into play. Funnily enough, the public sector borrowings in the UK is will potentially have some impact, but that's Tuesday. So you look at today's trading opportunities, there's very few. If anything, you're looking at the general, say the major pairs, and have a look where they are. Like you can't potentially get short where they are because, as I said, there's on the Aussie, there's 100 points to the top side here. Kiwi, same thing, pretty much about 80 points to the top side before it hits anything there. You've got about 60 points to the top side on Euro before you can get short. And also another 100 points there on sterling. So these currencies are in the middle of nowhere. And there's no joy in getting into these currencies at current levels. Now, if you are thinking sort of along the same lines as me, well, there's a chance potentially to be getting long some of these currencies and looking for that to cash in on that move to the top side. But what you're going to be sort of wrestling with is the demons, because overall, okay, we know the trend, the long-term trend on these currencies is down on all of them. So are you going to look for a short-term trade to the top side and maybe lock in some cash, or go against, and that's going against the trend, or do you just wait? Okay. The good thing is generally just to wait. Now, you can potentially go in with, like the no-brainer trade is a break trade to the downside, getting back into the downtrend here. Yeah, that's probably works on Tuesdays, but on Mondays, right, we're really looking at the major currencies and letting all these geopolitical events sort of flush through the market, right? If you come over to your news page, you'll see where, it's just focused still. There's a little bit of residual, Trump, oil. Actually, I mentioned on I think it was Thursday, there was a couple of big US hedge funds oil's going to $150 a barrel. Now, that sounded like a last-ditch effort to try and get oil up a bit so they can get out of their positions. Some of them have been absolutely hammered, which is great to see. I love it when the big hedge funds, they are just poison to the market. So it's good to see them get hit. Dollar slips as China-US trade worries. Okay, that's sort of just, they're coming back to some sort of agreement. Dollar CAD, as I mentioned, is the only currency pair that I can see that has very clear direction. Buy CAD against anything. Okay, and you're looking for retracements back to the levels where it broke on Friday. The rest of this stuff is all geopolitical crap. All right, so there's not much else to sort of really follow to, and the market will wait for those economic numbers to come into play. Now, let's just have a look at the US dollar, right? So you look at those major currency pairs, the dollar just trading sideways. As I said, those University of Michigan sentiment numbers didn't do it a hell of a lot of favors, and it's just started to drift lower. Now, the media outlets are saying it's, the concerns with China stuff are drifting off. It's like, that's still there. Okay, that's still an issue, but it's just the dollar longs are just getting a little bit frustrated, and they're closing out positions, especially on the back of those weak numbers. So I think, the important level is, does the dollar index hold, say, 95.90, which is only like 20 points away, and do we get a bounce or do we get a drift through? To me, at this early stage, I would say we get a little false breakthrough, and then we're back into the groove later on. Now, we may have to wait for the US durable goods to get that move. And you look at the offshore yuan, dollar yuan, right? Or dollar China. I should call everyone will get a bit more familiar with it. Now, we see these trend lines. The trend lines are on, let me just actually blow this up, because this is a really good example on a few different things. This currency pair, it is actually trading really well technically, just like the other major pairs. So you feel comfortable trading it. If anything, there's some great moves through the trend lines as well. You can see how here it gets into the barroom brawl and it's just sort of banging away sideways, and then it finally sort of gives in again. So now, to me, this whole move is like positioning. Like the whole tariffs on China is going to make the Chinese yuan weaker. But funnily enough, the whole market looks like the whole globe has got into the trade, and then maybe even the People's Bank of China, PBOC, have actually come in and sort of stopped it and pushed it down and just screwed the market out. This looks like a clean out of all those long dollar, short yuan positions, and this can't last. Okay, so I think we're going to see it massively higher. But if you come into the technical aspect, this is where it starts to get a little bit loose, because you start to go, and this is the hourly chart, okay, and you go back to sort of June, okay, it's come a long way. It's like 43 cents. I was going to say 43 big figures, but so see, look where it is now. Now it's in the middle of nowhere, okay, and you think, well, where's the next levels of support? Well, it's nowhere. You've got all these little lows here and there that you can sort of focus on, but that's almost fictitious. This is where you know, potentially, if you do have a bit more understanding of your analysis and you've been through the advanced Forex course that we have, you'll understand this is where potentially Fibonacci's and traders and fund managers will draw the Fibonacci retracements. We've got the low, we've got the high. You can start to see where the levels are. And as you can see, this first level here, 6.8224. Okay, it's not too far off where the damn thing sort of stalled the other day. So if it goes through there, then we've got a couple of levels, but these are your major levels going forward because there's no support and resistance. That's where we are. Now, you know, I think overall, the yuan or the Chinese yuan is going to fall. So the dollar goes through the roof. But the market is caught long. I can see a flush out down towards 6.74, to be honest. I mean, there's nothing to stop it. I mean, 10 cents on the yuan, it could happen in a day. So don't rule that out. So I just see how this thing goes. But don't be afraid to start looking at this currency pair because it is trading very well. It's very active in the Asian session, especially when there's announcements and economic data released out of China, right? I had one last week. I got 100 points out of it, or 80 odd points out of it in about 3 minutes. It was like, you know, it's always a little bit weird trading. I feel like you're trading Bitcoins. Not that I've done that, but I can imagine what it's like. You just don't know where this thing could turn. So it's a matter of just piecing the opportunity together and keeping an eye on that pair as well. So the market's got a little bit caught long dollars. And I would say a little bit of that dollar weakness was probably through dollar China than just the dollar itself. And as you know, as we move forward, you know, the dollar index, 58% of that is sterling. They should reweight that to really bring in, say, well, I probably won't do it just at the moment until the yuan sort of floats their currency. But, you know, the dollar index is overly weighted on euro and sterling. So if those two currency pairs are drifting high, of course it comes off. But equities, US equities closed up a fraction higher. Japanese equities or Asian equities are starting their day off just slightly weaker. So just keep an eye on that. That could be geopolitically driven or just that's the way they see things going. So that's it for Monday. There's not a hell of a lot to do, as in like you can spend too much time in front of the screens. That's not a good thing. Have a look at your charts. Have a look where, and you connect your charts to the fundamental releases. As I said, there's not much out over the next couple of days. So you are looking at the majors technically and starting to piece things together. All right, that's all you can do. There's, you know, you can try and do too much, okay, and start to really over-plan things, but there's nothing to do. Like here at the moment, you're looking at those currency pairs and you're sort of, well, I'm not sure what's going on. I can see a little bit of a bounce in some of these currency pairs, but it doesn't look like it's something that you can really rip into at the moment. And one other thing, don't forget, you've got the yen crosses as well. These things are gold mines when they really kick into gear. Now, if you look at the beast, okay, dollar yen, it is down below the cloud, and to me, it's just trading sideways in the big range. But we do have some currency pairs which are sort of either lagging this whole move. Now, you got Aussie yen, Kiwi yen, and Euro yen, which is sitting above the cloud. Now, the big brother here is dollar yen. Okay, this puppy here is the overall control of all these other currency pairs. So if this continues lower, well, then we could potentially see nice break trades on the downside in Aussie yen, Kiwi yen, and Euro yen. Also in sterling yen, it looks like it's trading sideways. A little bit too hard. I think we might see a bit of a thrashing about. And you've got oil here, which is the green bar. You've got CAD yen. It's still messing about. Obviously, the strong CAD is, the CPI numbers is going to have upward pressure on this. But once that starts to fade, and if oil continues to drop, okay, it's at 65.80 at the moment, we may see a decent move on the downside. But that's going to be a tricky one as we go towards September, where the Bank of Canada is expected to raise rates. So it's going to be interesting to see how that plays out. It could mess up the CAD yen trade at this stage. All right, guys, that's pretty much it from me. There's not much to do. Just tune up your charts, see what you can think where they're going. Focus on the pairs which have clear direction. Dollar CAD, or CAD is the Canadian dollar for me is the key one, and we'll piece it together as we go through the week. All right, guys, have a good week, have a good day, and I'll see you in the trade zone. All the very best. Cheerio.